Yesterday, we were talking about weakness coming through to the local unit on Tuesday. Today, we're talking about the local unit's strength that filtered through in yesterday's session, still within its very tight range. But what's it telling you, the kind of movement we're seeing right now about market sentiment?
Morning, Alishia. You're right, the rand did strengthen yesterday, recouped some of the earlier losses incurred this week. And I think as far as the rand's direction is concerned, it really is still being driven by global risk sentiment, particularly dictated by developments that we're seeing in the US and EU, with regards to their respected debt issues. So it does seem that the rand's trade is a bit volatile at the moment, but that really is reflective of the changes in mood that occur. Yesterday we saw the rand strengthen because there was news that the leaders of France and Germany had reached some sort of agreement as far as the Greece bailout is concerned. So we saw the euro strengthen yesterday, and the rand seemed to strengthen in tandem.
So when it comes to expectations out of today's Eurozone Summit, the bias in terms of sentiment is more so positive than negative right now. With that playing out in the Eurozone and those deficit issues still plaguing in the US, where does your favor lie right now if you're looking euro versus dollar?
That's a really tricky one, Alishia. As I mentioned, there does seem to be some reports out that some consensus had been reached in Europe, but we don't as yet know what the details of that are. Of course, depending on what the details, the market could either react favorably or negatively to that news. So at the moment, as far as our euro-dollar forecast, it does seem like the dollar is temporarily on the back foot as things in Europe seem to improve. But over the longer term, if this situation isn't sorted out in the short term, we would think that an ongoing crisis in Europe is far less likely to be resolved than the debt ceiling issue in the US. So we continue to see the euro lose ground against the dollar. So we look for the euro-dollar rate to head to about 120 at the end of this year. Yeah. But a lot, of course, will depend on whether that issue in Europe is resolved timeously.
Of course, while you've got those international markets really weighing on sentiment right now, having some effect on the rand's movement, yesterday was those weak retail sales figures that were released, again just cementing the fact that we're seeing really patchy growth locally as well.
Absolutely, Alishia. We had indicated at the time that the very robust growth that we saw in Q1 was unlikely to be sustained for the duration of the year, and already we're seeing that the latest manufacturing figures were surprisingly soft, and then that startlingly sharp slowdown in retail sales, just underscoring the fact that it does seem that the pace of economic growth, or economic growth tempo, is moderating, and perhaps at a slightly sharper rate than we had initially anticipated.
Well, where the Reserve's interest rate decision takes center stage today, we know it's expected to leave that repo rate unchanged at 5.5%. But the focus will be, on whether the governor gives clues as to when the tightening cycle is set to begin. Has the latest bit of economic data swayed your view in that regard in any way?
No, it hasn't actually. It's only reinforced our view that an interest rate hike this year is extremely unlikely. We'd long been saying that we expect the first move in rates to occur in the first quarter of next year. That's also when we see inflation breaching the upper limit of that target range. So, in fact, the data has only strengthened our view that there's not going to be an imminent move in rates. But should a series of soft data persist, then of course the debate is more likely to shift to whether the Reserve Bank will in fact delay the start of a rate tightening cycle. So of course today's meeting is going to be very key in shaping those expectations around further rate moves.